AUD-USD forecast. Market reactions ahead of U.S.-China trade talks. AUD-USD price outlook. A shift in market sentiment as USD gains strength ahead of U.S.-China trade discussions. The AUD-USD currency pair is experiencing significant selling pressure after a brief uptick during the Asian trading session, primarily due to a stronger U.S. dollar, USD, across the board. This shift in market dynamics is largely influenced by rising concerns surrounding the upcoming U.S.-China trade negotiations, which are overshadowed. In a notable development, U.S. President Donald Trump and European Commission President Ursula von der Leyen recently unveiled a comprehensive trade agreement that imposes a baseline tariff of 15% on a majority of European goods exported to the United States. However, the initial excitement surrounding this deal has quickly diminished due to concerns about its perceived imbalance and the lack of clarity regarding tariffs on the steel and pharmaceutical sectors. Coupled with the anxiety surrounding the resumption of U.S.-China trade talks, this has negatively impacted investor sentiment, thereby benefiting the safe haven appeal. This scenario further upward momentum. In contrast, the increasing consensus that the Reserve Bank of Australia (RBA) may lower interest rates is putting additional pressure on the Australian dollar (AUD), contributing to the ongoing decline of the AUD-USD pair as the new week begins. Moreover, Trump's repeated criticisms of Fed Chair Jerome Powell regarding his stance on interest rates have raised concerns about the potential erosion of the Fed's independence due to increasing political interference. This situation may deter USD bulls from making aggressive bets, thereby limiting the losses for the AUD-USD pair. Investors are likely to adopt a wait-and-see approach, looking for clearer signals regarding the Fed's future rate cut trajectory before committing to a specific direction. Consequently, all eyes will be on the FOMC policy update scheduled for Wednesday. In addition to the FOMC meeting, market participants will also be anticipating the release of the quarterly Australian consumer inflation figures on Wednesday. Furthermore, key U.S. economic indicators, including JOLTS job openings, the advanced Q2 GDP report, the personal consumption expenditure (PCE) price index, and the non-farm payrolls (NFP) report, are expected to provide fresh insights that could influence the AUD-USD pair. Technical analysis. From a technical perspective, if the selling pressure continues and the AUD-USD pair falls below the psychological level of 0.6500, it could expose the monthly swing low around 0.6455. This level is close to the 200-day exponential moving average, SMA, and a decisive break below this could pave the way for further declines. In such a scenario, the pair might accelerate its descent towards the horizontal support at 0.6420, heading towards the 0.6400 mark, and the June monthly swing low, which is situated around the 0.6375-0.6370 region. A convincing breach of this level would likely serve as a new trigger for bearish traders. Conversely, the 0.6550 level appears to be an immediate resistance point, with the 0.6585 region representing the year-to-date peak. Should there be a continuation of buying momentum beyond the 0.660 mark, the AUD-USD pair could rise to the next significant resistance near the 0.6640 area, potentially reaching the 0.6680 region, which corresponds to the swing high from November 2024. And the round figure of 0.6700. Final thoughts. It's essential to note that the information presented here includes forward-looking statements that carry inherent risks and uncertainties. The markets and instruments discussed are intended solely for informational purposes and should not be interpreted as a recommendation to buy or sell any assets. Conducting thorough research before making investment decisions is crucial. FX Street does not guarantee the accuracy or timeliness of this information, and investing in open markets involves significant risks, including the potential loss of your entire investment. The views expressed in this article are those of the authors and do not necessarily reflect the official stance of FX Street or its advertisers. The author has no financial interest in any stocks mentioned and has not received compensation for this article. Aside from that, from FX Street, engage with us. What are your thoughts on the current state of the AUD-USD pair? Do you believe the market's reaction to the US-China trade talks is justified? Share your opinions in the comments below. AUD-USD Forex signal for July 29th. Bearish trends and smart trade strategies. AUD-USD Forex signal today. A bold sell-off on the charts by Adam Lemon. Adam Lemon began his role at Daily Forex in 2013 when he was brought in as an in-house chief analyst. He trades Forex, stocks, and other instruments in his own account. Adam believes that retail traders/investors can secure a positive return over time if they limit risks, follow trends, and persevere through short-term losing streaks, as long as they use reputable brokerages. He has previously worked within the financial sector. My previous AUD-USD signal on 17th July was not triggered, but here's where it gets interesting. Today's AUD-USD signals risk 0.50%. Trades must be taken before 5 p.m. Tokyo time Wednesday. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.6541, 0.6554, or 0.6569. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit, and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame, immediately upon the next touch of 0.6495 or 0.6448. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit, and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside, or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. AUD-USD analysis. In my previous, none set up that day, and the price made a strong bullish bounce after rejecting 0.6458. This was not a great call, and this is the part most people miss when analyzing the markets. The technical picture is again looking bearish, although it's not very clear why. It seems that markets have enjoyed some good times for risky assets and are now fearing the rally has gone too far. The defining feature of this move is the strong advance by the US dollar, which we've seen yesterday and today, resulting in a significant decline for this pair. Despite the bearish sentiment, we see the price approaching the key support level at 0.6495, which is likely to be strong. This level is confluent with the major round number at 0.6500, and the price was comfortable in this area when last there, so we might see the start of a bullish swing from here. I would look for a speculative long trade today from a rejection of the $0.56500 area, but be ready to take profit if the US dollar momentum seems to get going again. Regarding the AUD, CPI inflation data will be released at 2:30 a.m. London time. For the USD, JOLTS job openings data will be released at 3 p.m. Ready to trade our free Forex signals? Check out our top 50 Forex brokers in the world. AUD-USD. What to expect in a pivotal week for Forex traders. The foreign exchange market is on the cusp of a monumental week, and the Australian dollar, AUD, is set to be at the heart of the action. Imagine the tension in the air as traders gear up for what promises to be a roller coaster ride, with pivotal events such as the Federal Open Market Committee, FOMC, meeting and Australia's quarterly inflation data looming on the horizon. This is the part most people miss. Behind the scenes, the AUD is navigating choppy waters. With the Royal Bank of Australia's recent decision to keep interest rates steady at 3.85%, sparking mixed reactions. But here's where it gets controversial. While the AUD initially soared to 8-month highs, the momentum is shifting. Australian funds are hedging their foreign investments, particularly with the US, which should theoretically boost the AUD's value. Yet, markets are always looking ahead, and traders must be ready to adapt quickly. The upcoming FOMC meeting is a game changer. The Fed's communication strategy will be under the spotlight, and the RBA's anticipated rate cut in the next meeting adds another layer of complexity. The AUD has already faced a setback after the greenback's unexpected resurgence, forming a bearish divergence. As the AUD-USD pair struggles to maintain its upward trajectory, daily momentum is now tilting downward. The 50-day moving average, MA, is providing temporary support at 0.6510, but sellers are eager to regain control. The market has retracted sharply from recent highs, and if the price breaks below the immediate pivot zone, we could see a significant downward reversal. So, what should traders watch out for? The Australian inflation data, set to be released on Tuesday, will be crucial. A beat on the consensus of 0.8% could dampen rate cut expectations and boost the AUD. As we navigate these turbulent waters, remember to stay vigilant and keep a close eye on the hourly channel and the immediate pivot zone. Safe trades and a successful week ahead. Please note, the opinions expressed in this article are solely those of the author and do not necessarily reflect the views of AUD Business Information Services, Inc. or its affiliates. This content is for informational and educational purposes only.